Morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, January 15th. Hey, we do got a few economic news releases on the docket today. We'll start off with the weekly jobless claims. So last week we had 297,000 people apply for unemployment. Forecast supposed to be in that same range of 295, and it jumped actually up over 316,000. So if you've followed my recordings here, you'll notice that I always said be careful in January with employment numbers, and even December's, because a lot of times you get people applying for temporary positions for the holiday season, and then once the holidays are over, of course, they'll go back to an unemployment line. So we had a little bit of a spike here as a result with unemployment here. Producer Price Index. This is the inflation numbers on the wholesale side of things. Now, this is important to some respects, but not that important, primarily because even though the costs go up on the wholesale side of things, the wholesalers don't always pass on to consumers. So we follow more of the inflation numbers for the CPI as well as the PCE indexes, because those are on the consumer level. But to go back, we had back in November we had a negative 0.2, so contraction pricing 0.2%, and it was supposed to drop even further down to 0.5%, but it only dropped 0.3%. A lot of that, of course, is the food and energy that's bringing that, reducing those costs. On the other hand, we got the manufacturing numbers. We got the Empire State Index. This is the manufacturing in New York. So we had a contraction back in December at negative 1.2. Forecast is supposed to go up to 5, and it jumped up to 10. So decent numbers right there after a disappointing December. On the other hand, you got Philadelphia Fed, which is the manufacturing in the Philadelphia region. We had a 24.3, and it was supposed to come down to 19, and it dropped much further down to 6.3. So kind of a mixed bag of economic news releases, with the job numbers going up, or people applying for unemployment going up. Manufacturing in different regions varied. Obviously, New York going up, Philadelphia going down. Producer Price Index, costs are going down in that level as well. So of course we have to watch inflation numbers, because the big concern with inflation has to do with possibly deflation, and that could be worse than too high inflation. So let's take a look here. The stock market's down. It's not so much because our mixed bag of economic, but it's all due to the Swiss franc. Those are the big moves today. Switzerland, what they did was their national bank, the SNB, went in, and what they've been doing, they've been kind of buying up euros to keep like a 1.2 Swiss franc to a euro currency exchange, keep that ratio intact. So it's at least a minimum 1.2 euros to 1 franc. Now, on the horizon, we all been hearing a lot about this quantitative easing that the ECB is going to be releasing here, and they think it's going to happen very soon. So the Swiss National Bank, rather than hurting their currency further, because it was going to create them wreaking havoc on their currency, we're going to have to buy a ton of Swiss francs just to maintain this. So they cut that. They cut that tie there, which strengthened the Swiss currency as a result, and they also dropped 0.5% on their interest rates. And their Fed funds rates over there. So this caught the markets totally by surprise, and this is what's creating worldwide havoc on the international markets, on the equity markets. So you'll see here how it's affecting the bond markets, but basically, Switzerland kind of took itself away from the euro to kind of protect its own currency. So let's take a look here at how it's affecting. As a result, we're actually seeing it much better. So a lot of that money is going into the bond market, which is helping out interest rates. So we're down slightly from where we left off, or actually we're up slightly from where we left off yesterday. So we're up quite a bit, and then came back a little bit, and we're back up again. So improvement in our pricing here for interest rates. So good overall numbers. We haven't seen these numbers in a little while. These are actually probably better than the numbers we saw back in March, or actually rather in October of 2014. So we're starting to get earlier in the year the better pricing. So we may see this, especially with things like that could become a surprise. We still got things going on with Russia. We still got things going on with Greece, and now of course the Swiss action with the quantitative easing going on in Europe that's soon to be released. We could see rates remain low, and nobody's anticipating right now. Very few people are anticipating now that the Fed will probably be raising rates with all this stuff going on a global level here. All right, folks. Hey, you guys have a wonderful day. We'll look forward to seeing you guys tomorrow. Hey, if you guys are needing a pre-approval or looking to refinance, give me a call. We could or shoot me an email. We can certainly help you out with that level. I do mortgages in the state of California, and be more than happy out. We do got some great loan programs. Even for those who have had foreclosures, BKs, or even short sales, we can get them back into the market after 1 to 2 years. So we have a new loan program for those people. Have a great day. Take care. Bye.